Is GEX controlling the market? What every investor needs to know. The hidden force behind market chaos. Have you ever wondered why your favorite stock suddenly rockets or crashes without any obvious news? You follow earnings reports, track the headlines, do your analysis, and still, prices move the opposite way. It's not always about fundamentals. Sometimes, there's a hidden puppet master at work in the options market, GEX, short for gamma exposure. While most beginner investors have never heard of it, professional traders and hedge funds watch it religiously because it can quietly steer the behavior of entire stocks and indices. Understanding GEX could be the difference between making money and getting blindsided by unexpected market moves. If you want to finally uncover what's really driving volatility, this guide is your must-read. Let's break it down. Chapter 1. What is GEX in the stock market? GEX, or gamma exposure, is a metric that measures how options market makers hedge their positions in response to changes in the price of the underlying asset. When traders buy options, market makers sell them and hedge their exposure. GEX tells us how aggressively these market makers need to buy or sell stocks or indices to stay neutral. The higher the gamma, the more intense the hedging. And that hedging can cause massive price swings. In plain English, GEX tells you how much stock is being bought or sold, not because of news or earnings, but because of complex hedging mechanics in the options market. Chapter 2. How GEX affects stock price movements. The domino effect of GEX. Let's say GEX is highly positive. That means as stock prices rise, market makers buy more stock to hedge, creating a feedback loop that pushes prices even higher. This is known as a gamma squeeze. When GEX is negative, the opposite happens. As prices fall, market makers sell more stock to hedge, accelerating the drop. This is why some stocks crash faster than you expect. Understanding GEX allows investors to anticipate short-term price direction and ride the momentum before the crowd catches on. Chapter 3. GEX versus VIX. What's the difference? You might be familiar with the VIX, also known as the Fear Index, which tracks market volatility expectations. But while VIX shows how nervous the market feels, GEX shows how reactive the options market is. Where VIX measures emotions, GEX measures action. Combining both gives you a powerful edge in predicting big market swings before they happen. Chapter 4. How to read a GEX chart. Platforms like Spot Gamma or Tier 1 Alpha provide GEX charts for various stocks and indices. These charts show gamma levels across different strike prices. Key levels to look for. Gamma flip zone, the strike where gamma turns from positive to negative. Price tends to magnetize to this level. High positive gamma, expect lower volatility and tighter price ranges. High negative gamma, brace for wild swings and breakouts. Knowing where the gamma flip happens can tell you if the market is likely to consolidate or explode. Chapter 5. Why smart traders monitor GEX daily. Institutions and hedge funds pay attention to GEX every single day because it reveals the real supply and demand behind the scenes. If you're swing trading or even scalping, GEX tells you whether the environment is supportive for continuation or due for a reversal. Think of it like a weather forecast for price action. When GEX is neutral, fundamentals and sentiment drive the market. But in extreme GEX conditions, hedging pressure can override everything else. Chapter 6. How GEX creates market magnets and repellers. When gamma exposure is concentrated at specific strike prices, it can act like a magnet, pulling the price toward it, or a repeller, pushing the price away. Traders use these zones to set stop loss and take profit levels, predict intraday reversal zones, time entries with more accuracy. These GEX-based zones are more powerful than support and resistance levels drawn by most beginners. Chapter 7: The Role of Options Expiry and GEX Shifts. GEX isn't static. It shifts with options expiry, open interest, and price movement. Especially during monthly options expiration, OPEX, GEX levels can shift rapidly. On those days, massive volumes of contracts expire, and hedging is adjusted or unwound, creating huge volatility. Smart investors monitor GEX before and after options expiry to anticipate potential breakout or reversal plays. Chapter 8: Step-by-Step Guide to Using GEX in Your Trading Strategy. Step 1: Get access to a GEX tool. Use tools like Spot Gamma, Tier 1 Alpha, or free Reddit charts to monitor GEX levels. Step 2: Identify the gamma flip zone. Mark this level on your chart, it's often where price gravitates. Step 3: Watch for high positive or negative gamma. Use it to assess whether the day will be choppy, positive gamma, or volatile, negative gamma. Step 4: Combine with technical indicators. Use moving averages or RSI for extra confirmation. GEX tells you the why, while your indicators show you the when. Step 5: Adjust your risk. In high GEX environments, go light and quick. In low GEX environments, look for trending setups. Chapter 9: Real-life examples of GEX in action. Example 1: Tesla's gamma squeeze. In late 2020, Tesla experienced a massive gamma squeeze as options demand skyrocketed. Market makers were forced to buy Tesla shares to hedge, pushing the stock higher for weeks. Example 2: SPY and the magnet level. Traders noticed SPY consistently hovering around the gamma flip level ahead of FOMC meetings. Knowing this, they avoided fake breakouts and waited for real directional confirmation post-event. Chapter 10: GEX isn't magic, but it's a powerful edge. GEX is not a crystal ball. But when used correctly, it gives you an institutional edge in predicting volatility, direction, and price zones. It doesn't replace fundamentals or technical analysis. Instead, it completes the picture, giving you a third layer of insight. Whether you're a swing trader, options trader, or long-term investor, keeping an eye on gamma exposure can save you from market traps and put you on the path to better trades. Conclusion: So, is GEX controlling the market? Yes and no. GEX isn't a conspiracy theory or market manipulation tactic. It's a reflection of how options markets function and how professionals hedge billions of dollars daily. But for the everyday investor, it's a secret weapon hiding in plain sight. Use it wisely, and you'll be steps ahead of 90% of the market. Want to learn more? Kindly like, comment, share, and subscribe to this channel for more insightful videos. Thanks for watching.